Well, retail earnings kick off in earnest next week with Target and Walmart among the key names reporting. Investors focusing in on what the retailers have to say about the consumer and the impact of tariffs so far. Walmart shares are up over 10% this year, helped along by its e-commerce and grocery businesses, while the more discretionary focused Target has dropped nearly 24%. So for more on what to expect from these companies, Mizuho senior analyst David Bellinger joins us here on set. David, thank you so much for being here. Obviously, we do a lot of comparisons, and we put Walmart versus Target and Home Depot versus Lowe's. We know that there are differences. What should we expect from Walmart? I mean, that is the biggie. It is almost always the biggie. What are you looking for?
Yeah, thanks so much for having me on. So, yeah, we think Walmart's going to have another very strong quarter. We're looking for same-store sales growth in the U.S. of about 4%. And what we're really looking for with this report is basically the tariff push to consumers on the start to Q3. We think Q2 is fine. But going forward, what do we look at for the back half of the year, the risk assessment, and just what's the appetite of the consumer to take these increases? We think it's been fine so far, but there are risks ahead. We think Walmart will be fine here. And just a few other data points. We have some tariff noise with the gross margins, can be a little messy. And we'd also love to hear just
because of the accounting method.
Exactly. The accounting method will come through here, so there's some noise in the numbers. And then looking forward, Walmart's done a lot of this AI agent investment. I'd love to hear more about that, something they haven't gone into much detail about, but that could be the next wave of e-commerce growth for them.
And then if you flip it and then you look at Target, which, again, often gets compared, even though the businesses can be different, there's a lot going on with Target. Obviously, there are some investors that seemingly are not happy with the trajectory the company has been on and the choices that have been made by CEO Brian Cornell and his team. And then, obviously, you have this breakup that kind of surprised me with the Ulta business, because they've been talking about how strong beauty is, and it was up 7% over last year. And then out of nowhere, we're ending the partnership. What in the world's going on at Target?
Yeah, that was a very interesting development this week. And you actually had last quarter was one of the first quarters in a long time that Target had negative sales growth in the beauty category. We think some of that is due to Walmart. But then also you got a new CEO of Ulta. Mm-hmm. There could be some issues there with the in-store labor, some inventory shrink. So we think that's why this sort of got peeled back. It has more to do with the, call it, messy store operations of a Target. But we are getting closer to this potential new CEO announcement for Target. We actually ran an investor survey a few weeks ago, and unanimously, almost 96% of investors wanted an outside hire, someone new, someone to come in and give a fresh look and bring some type of wholesale change to Target. So maybe we get that this week or this coming week, or it's a little bit after that. But I think we're closing in on the new CEO announcement. And
also because we know that Brian Cornell had signed a contract extending his employment and changing the retirement age, but that also is coming due. So it's not just potentially the operations, but what we know about the contract that is getting us sort of to play this parlor game that we think there's going to be a new CEO.
Exactly. So his retirement age was supposed to happen in September of 22. Mm-hmm. They pushed that back 3 years, so we're basically there now.
Right. Got it. And then lastly, when you're looking at a Home Depot, this one I find very interesting because last quarter, when we come back to this tariff comment, they said that they generally intend not to raise prices. They also use room accounting. They also, can employ a portfolio approach to raise some prices and not others. Are we going to be able to really tell what happened when the numbers come out?
We should. I think it would be a little messy of a quarter because everyone knows that the spring season was not great and that's been well telegraphed. I think these companies across the board, really, we've seen some phasing in of the price increases, so that'll hit in the later stages of the quarter. But to be honest with you, I don't think anyone really cares about this quarter because we're starting to talk about rate cuts again, and it looks like it's actually happening. You've seen Home Depot and Lowe's outperform this week, and I think that's sort of the thing people are pointing to as opposed to was Q2 going to beat or miss. So I think that's well in numbers already, and people are looking forward to rate cuts and this sort of sparking the recovery we've all been waiting for years now.